By the way, when you started your first answer, I think they're all cursing me because you started by saying, you can build a high quality portfolio with a 10 to 15 PE. And they said, okay, what next? And you proceeded to something else. I think that's the part they're interested in.
Okay, I've been on both.
Little louder, Kenneth.
My investing experience actually got built through through what Peter Lynch wrote in all his books, right? So one way to outperform indices is there are two ways to outperform indices. One, you build a portfolio outside the index, so you take the breadth of the market, and the second way to do it is concentrate within the indices itself. Okay, and both work. So I've had colleagues and I have a peer group who've done extremely well for a long period of time, and everyone has different styles. I think you've got to pick the style that works for you. Okay, and the longer you keep doing it on that style and the number of stocks that you're doing, I think you will just, over a longer term period, you'll stop making mistakes. Like Devina says, you stop making mistakes and let the winners run. And that's how I do it. So my sweet spot is anywhere between 20 and 30 stocks. That's a lot. That's 50% more, but that's a sweet spot that we are in. Okay, so that's a little bit of the concentration paradigm that I've come across.
Okay. Ridham, I want to ask you about, there's a final session this evening about how to generate alpha. But since you're not going to be there for that section, I want to touch upon what Saurav said earlier about ETF investing. Because the strange phenomenon is that India did very well relative to other markets in 2022. But 60% of the funds in India actually could not beat the index. All the PMSs and mutual funds did far worse than the index. How do you, we know why it happened, but what's the way around that?
So, Udayan, that's not a 2022 problem.
Perennial problem.
That's a perennial problem. I think Devina mentioned this, that picking a 10-bagger or a 100-bagger, knowing that in advance is very hard and almost impossible. Likewise, picking a fund manager who's going to outperform in advance is a similar exercise, and it's not really possible. And I think it was in the 1994 Berkshire Hathaway AGM that Charlie Munger, in response to a question about how to invest, said that unless you have Warren Buffett's skills, just buy index, right? And the index investing has boomed in America as a consequence of the fact that it is very hard to know in advance which fund manager will do well. And this actually goes back to this whole concentration and diversification debate. It is all right to concentrate so far as you have the skills and, more importantly, the stomach to sit through it. I mean, what Saurav has, which a lot of us don't have, is a lot of stomach. I mean, he can sit through that volatility that a 15 stock or a 10 stock portfolio will suffer. If you don't have that stomach, and if you're prone to making mistakes, when your stomach starts grumbling and you start feeling uneasy, then you have to do what Devina is saying, which is buy a well-diversified, geographically, sectorally, asset-wise, which will not go through those drawdowns that, concentrated portfolios go through. So I think that's where the concentration versus diversification debate lies. There is nothing right or wrong. It's just about your own, what is your own character? What is your own character? Do you have the ability to sit through the extreme volatility that concentrated portfolios tend to suffer from? So going back to your question, it is as difficult picking up the winning fund manager. So if you don't have the stomach to go through that underperformance, then you have to do what Devina says. And if you can go through it, then, fund managers bounce back, just like markets bounce back, just like stocks bounce back. So those who underperformed in the last 2 years will likely outperform in the next 2 years. Only thing is we don't know who.